As a venture capitalist, how are you seeing things?
Well, first of all, it's so great to be back here, Ed.
Awesome.
Wow, it's July 1st, right? Just think
We made
about
it.
We made it. You know, the past 6 months have been the worst 6 months, as you reported on earlier, in the stock market for over 50 years. There's a lot of turmoil in the markets, and I always say this, that uncertainty is a foe of the markets. From my seat in the private markets, we haven't fully seen the impact of the effect on the public markets flow into the private markets.
That's a good point. We got this chart that looks at deal count, basically the number of rounds or venture-backed startups bringing in fundraising. And between the first quarter and second quarter, there is this dip. You know, we see it on our screens, particularly pronounced in early stage. But there still seems to be money flowing to early stage. I mean, where are you looking right now in the world? Is now a great time to fund young startups, or are you looking at later stages?
That's a very complicated situation. For me personally, I focus on the Series B all the way up to pre-IPO stage.
Right.
When we think about what's been happening in the markets, all this volatility, everything from record high interest rates to rising inflation and even geopolitical risk, we saw that impact in the public markets. The next group of assets to be affected are the very late stage private markets, companies like Klarna and Instacart. And then it's kind of my stage. My stage is a little bit frozen right now because on one hand, a lot of companies raise a lot of money in 2021.
Right.
They might have 30 months of runway. They don't need to absolutely raise now. On the other hand, investors don't know where the valuation is going to settle quite just yet.
Well, I want to bring you up on that point, down rounds. You know, we've seen a few. What's your read on that? It's not necessarily a bad thing, but what's your take?
It's definitely not necessarily a bad thing. I think it's inevitable given some of the run-ups that we saw in 2021. And it might feel really bad, with all the headlines we're seeing around layoffs and everything like that. But this is an opportunity for companies to reevaluate what they're actually worth and prepare themselves for future rounds that they may have to raise.
I want to ask you about opportunities, but we just showed some of your portfolio companies on the screen. What are you telling your founders? What advice are you giving to them if there is a recession looming about how they manage their businesses, about their cash?
We're telling them, in any times of uncertainty, there's so many things they can't control, but what can they do to gain ball control, right? To control their own destiny. So the top two things are, number one, cash is king in a recession. Keep a very, very sharp eye on cash. And a related matter, really focus on efficiency. Take a hard look at your go-to-market and overall burn efficiency and make changes if you have to. And also, it's an opportunity to play offensive. We always talk about some of these great companies that were forged.
That's why I like you. You always come in with a smile on your face. You're optimistic about opportunity. Where do you see the opportunity?
Oh, I'm very, very optimistic. I mean, at a high level, we're very, very bullish on general cloud-based SaaS. I think the transformation to cloud is still in its early innings, and there are many pockets that I am focused on and my firm, Sapphire, is focused on that I think are going to be doing well regardless of any market. Things like cybersecurity, right? Always going to be a hot topic. Things like future of work, things like healthcare and how technology can transform healthcare.
With the greatest respect, cloud, SaaS, cybersecurity, those things always come across in a lot of abstract. They're present in our everyday lives. How do you determine what's a real company, one that's product is going to thrive with those things being important to corporate America, the world?
Yeah, we look at two things very, very closely. The first one being, how do customers actually use a product, and do they love the product? This is where being a later stage investor is a little bit easier than a super early stage investor, because the companies I'm looking at, they have real customers. So we spend a lot of time talking to the customers and understanding, hey, is this solution really solving an important pain point for you?
Right.
And importantly, are you willing to pay for this solution? The second thing we look at is a proxy of how strong the product market fit is, and that's how efficiently can you sell your product.
Very quickly, are you optimistic about the second half of 2022?
I think it's going to take some time for the changes to flow through the market. I think we're in for some hard times ahead. I don't know if it's going to be 1 quarter, 2 quarters, 3 quarters, or more. But again, my message to everyone is this is an opportunity to look inwards, get your house in shape and be ready for the future.